Hello students, myself Meenakshi Sharma, and today I will start the next chapter, that is the calculation of national income of macroeconomics. Students, you know that there are three main methods of calculation of national income. These methods are value added method, income method and expenditure method. One by one we will discuss these three methods, and first of all, we will start the value added method, that is also known as output method or product method. The formula of value added method is we first calculate the gross value added at market price. The formula is total sales minus intermediate consumption plus change in stock. We will elaborate this formula with explanation. First of all, we will find out the total sales. Total sales include exports. Only if domestic sales are given, we need to add exports. Subtract intermediate consumption from sales. Intermediate consumption includes imports. Only if domestic purchase is given, we need to add imports. Intermediate consumption refers to the expenditure on raw material, advertisement and electricity. Then change in stock is to be added. Change in stock is the difference between the closing stock and opening stock. So I hope you understand, total sales mean how much total sale of a firm or of a country in one accounting year. We will subtract the intermediate consumption from that because it is the cost of raw material, and we will add the change in stock. Change in stock is also known as closing stock minus opening stock. We need to find out the other formulas from it. That is, first of all, we have find out the gross value added at market price. Now if we want to find net value added at market price, we need to subtract the depreciation from it. Depreciation, we know depreciation means khisawat. In one accounting year, how much depreciation came in all the fixed assets, we will subtract the depreciation from market price and it will become the net value added at market price. And if we subtract the NIT, net indirect taxes, from net value added at market price, it will become the net value added at factor cost. So this net value added at factor cost is also known as national income with value added method. So with these steps, we will find the net value added at factor cost, net value added at market price and net value added at NDP at market price. So these are 3-4 formulas which need to revise for calculation of national income in with value added method. While calculating the value added method, we will face the problem of double counting. While counting the national income, the counting of a value of a commodity more than once while calculating national income is known as the double counting. Double counting means double time. If we count any item, it will become double counting. So for example, if the value of intermediate goods is included, it leads to double counting. For example, a baker uses wheat flour to make bread. If we include the value of both wheat as well as bread, it leads to the double counting because if we include the price of wheat flour as well as the bread, then the problem of double counting will arise. So we need to take some precautions while calculating the national income. We will not add the one thing at two times. So for avoiding this situation, we need to take the two precautions. First precautions is calculate only the value of final goods. We are not adding the cost of intermediate goods in the national income or in the GDP. So you will calculate the cost of or the value of final goods and services. Do not include the value of intermediate goods. And second way is subtract the intermediate consumption from the sale by the firm while estimating the national income by value added method. Or first of all, we will only calculate the final goods price, or if we calculate the whole prices or the intermediate and final also, then we will subtract the intermediate consumption out of the final sale. So these two precautions if we will take, then the problem of double counting should be solved. I hope you understand. Now, how to calculate the national income with value added method. Here in this numerical we need to find this numerical is given, we need to find the net value added at factor cost, and these are the items in crore. These items are goods and services tax, consumption and fixed capital, closing stock, corporate tax, opening stock, sales and purchase of raw material. There are some items which are not important in this numerical, but for confusion they gave these items in this numerical. So you need not to add or subtract these items from the in formula. So we will find what are the main component of this formula. Sixth item, that is sale is the main component. We will in formula we have done, we will take the sale and we will subtract the raw material cost out of that. So sale minus purchase of raw material, okay, and plus closing stock minus opening stock, third and fifth item. So according to this formula, we will take these three things only. First is the sale, we will subtract the intermediate consumption, and we will add the change in stock. Change in stock means closing stock minus opening stock, that comes in minus 10. So sales is 540, intermediate consumption is 140, and change in stock is minus 10. So gross value added at market price comes, that is 390. Now we need to find net value added. Net value added, if you want to find, we will subtract the depreciation from it, and depreciation is 5. So our net value added at market price is 385. Then we need to find net value added at factor cost. According to the question, you need to follow the steps. First we find the GVA at market price, then NBA net value added at market price. Now we are finding the net value added at factor cost. Okay, that is, if we subtract the net indirect taxes from it, it will become the net value added at factor cost. It is 360. Hope by step we will solve the formula, we will solve the numerical, then ultimately the answer will come. Okay, I hope you understand. Next we will take some precautions while estimating the value added method. That is, the value of intermediate goods should not be included in the national income or in the calculation of GDP. We will not add the intermediate goods, cost of intermediate goods. The value of second hand goods should not be included because already one time we have included it. The value of illegal activity should not be included. The value of leisure items and non-market goods should not be included. The value of transfer payment should not be included. Transfer payment are the free gift or grants. These are the one-sided payment. So we are not adding the transfer payment in value added methods. These precautions you will take care while calculating the national income with value added methods. I hope you understand this first method. Now come to the next point, that is the income method. This is also very important and very easy method. In income method we are taking the three main components. These three main components are compensation of employees, operating surplus, and mixed income of self-employed. These three main items we will add in to find out the NDP at market price, net domestic production at factor cost. We need to find, we will add these three main items. What is the meaning? We will elaborate it. What is the meaning of it? That is, first is compensation of employees. Compensation of employees can be calculated by adding wages in cash, wages in kind, employers' contribution to social security schemes, and pension on retirement. If all these are the components of compensation of employees only. So if compensation of employees is given in the question, then component can be ignored. Okay, you will not add two times. If components are given, you will not take the compensation of employees. If compensation of employees is given, you will not need to find the components of it. Next is operating surplus. Operating surplus can be calculated by adding rent. Rent includes actual rent and imputed rent. Royalty, interest, interest on loans taken for productive services only. Okay, and profit will also include three things. These are corporate tax, dividends, and retained earning. So while calculating the operating surplus, if these operating surplus is given, then you will no need to add the rent, interest, profit. If operating surplus is not given, then you will add the rent, interest, profit over there. Okay, mixed income of self-employed means if we are using our own services, our own labor, our own capital, our own land, then from that land or from that services, if we are getting money or if we are saving the money, that is known as the mixed income. That refers to the income of own account workers, farmers, farmers, and uncorporated entrepreneurs like related traders, small shopkeeper, etc. So, net national production at factor cost, if we want to find, we will take NDP at factor cost plus NFIA, that is net factor income from abroad, and we come to calculate the national income. This NNP at factor cost is also called the national income. Okay, I hope you understand this. There are three main components. The components are compensation of employees, operating surplus, and mixed income. Now come to the numerical portion. This numerical is of income methods. Look at the items: rent, interest, dividends, undistributed profit, corporate tax, compensation of employees, consumption of fixed capital, net indirect taxes, and net factor income from abroad. Here also some items are unwanted. They need not to be subtract or add. So we will find out the main items: rent, interest, and profit. Profit here is divided into three parts, that is dividends, undistributed profit, and corporate tax. Compensation of employees is given, but Mixed income is not given. So we will calculate it like this. NDP at factor cost is equal to compensation of employees plus operating surplus plus mixed income. Compensation of employees is given 400. Operating surplus is rent plus interest plus profit. We are calculating this. Rent is given, interest is given, and profit is divided into three parts: dividends, undistributed profit, and corporate profit. We will add these three things, and profit comes 60. So operating surplus is 20 plus 30 plus 60, that is 110. So NDP at factor cost we will find, that is COE plus OS, means operating surplus, because MI is 0, MI is not given, so we'll take it 0. So NDP at factor cost comes as 510. Now GDP at factor cost we need to find, then we will add depreciation here. Depreciation is 10 given in the items, that is then if we add it become 520. And if we need to find market price, we need to add the net indirect taxes in it, that is 50. Then GDP at market price comes at 570. Now GNP at market price is GDP at market price plus NFIA, that become NFIA is in minus, so our GNP at market price is 560 crores. Hope you understand how to solve the numerical. Next, what precautions we will take while calculating the national income by income method. Do not include transfer income, that already you know. Transfer income is not added in the national income. The incomes of illegal activities should not be included. The income earned by selling second-hand goods should not be included. Commission earned by the broker in the sale of second-hand goods can be included. The income earned from leisure time activities should not be included. The income earned by selling shares should not be included. It is considered as transfer incomes because only transfer of ownership takes place. So if we are selling the shares here and there, we will not include the income earned from selling share. So that's all about the income method. So hope you understand the value added method and income method very well. So you need to calculate the national income with these three methods and find some numericals, calculate some numericals, so that you understand the method properly. Hope you understand, and if you understand the things, like and subscribe my channel to watch the next method, that is the expenditure method. Goodbye. Take care. Bye bye.